Welcome to accounting tutorials once again. Today we are dealing with prepaid expense. Prepaid expense is a current asset. So a financial year is made up of 12 months. Say your year starts on the 1st of January every year. That means it will end on the 31st of December every year. However, if this year you happen to pay insurance for the, or rather, let's say you happen to pay an expense for the next year while you are still on this year, that means you are paying this expense in advance. When you pay an expense in advance, now that expense is called a prepaid expense, an expense that's paid before time. In our trial balance here, we are given insurance expense of 1,400. Additional information tells us that insurance premiums for the first 2 months of the next financial year have already been paid, which means we've paid for 2 months in advance. Now let's check how much is insurance per month so that we can be able to account for the 2 months that's premature. You say 1,400 multiplied by, you are looking for rent for 1 month, so multiplied by 1 month over 14 months. Why are you dividing by 14 months? Because you are told that this 1,400 is not for 12 months but for 14 months. How so? Your financial year is 12 months, but you've paid for the next 2 months for the first 2 months of the next financial year. 12 months plus 2 months gives you 14 months. Hence, we're dividing by 14 here. Then your insurance is 100 rands per month. How many months did you pay in advance? You paid for 2 months. So you say 100 rand multiplied by 2 months equals to 200 rands. Your prepaid expense is 200 rands. Then when you go to your income statement to disclose your insurance expense, you are going to say under insurance, you open your brackets, you say 1,400 minus 200 rands, because you are only accounting for expenses that belong in the current financial year, and that's only 12 months. Then, if you are required to do the statement of financial position, now this money still belongs to you. You paid it, but it still belongs to you. So you are going to include your prepaid expense under current assets on the note which is called trade and other receivables. So in your trade and other receivables, you'll have your net debtors, then you'll have your accrued income, which we've covered already, then you'll have your prepaid expenses. Then under your prepaid expenses, in this instance, you would include the 200 rands of insurance.